Okay, everybody, so here's the next set of questions. We did 1 through 10 on the last video. How does the Pregnancy Discrimination Act prevent discrimination against pregnant employees? 1, they must receive more benefits than are provided to non-pregnant employees. Non-pregnant employees who participate in the employees group health plan can be charged a higher premium. They must be treated the same way as non-pregnant employees. Non-pregnant employees who do not participate in the employee's health plan can be prevented from joining it. All right, I'm going to leave it. They must be treated the same. Maybe they're supposed to receive more benefits. I don't know. All right, which level of long-term care provides continuous 24 care delivered by licensed medical professionals who are under a doctor's supervision? Which level of long-term care, 24-hour care, is probably nursing or immediate care? Here he comes again, but he's just driving by. Okay. All right, it's either immediate care or skilled nursing care. 24-hour care delivered by licensed medical professionals. I'm thinking long-term care might be immediate care. That's a tough one. But we'll find out. Maybe if they tell us the correct answer. I don't know. Okay, insurance producers who do not promptly remit funds to principals must deposit the funds in a trust account, holding account, premium account, or interim account. I put trust account. All right, I need to pause. Okay. If a universal life insurance policy owner skips a couple of monthly premium payments, what is most likely to occur, assuming the policy owner wishes to keep the policy in force? The policy will remain in force as long as the cash value covers the monthly deductions and charges. The death benefit will be decreased. The skipped premiums are treated as policy loan. The policy will lapse at the end of the premium grace period. So which most likely is to occur if they want to keep the policy in force? The policy will remain in force as long as the cash value covers the monthly deductions and charges. I'm guessing that's the right answer. All right. In its fiduciary responsibility to its principal, a producer is required to do all of the following except fully account for premiums and then submit them to the insurer on a basis, fully disclose to the insurer all pertinent information, carry out authorized activities with reasonable care, solicit business that is certain to be profitable to the insurer. So it would be the first one. Fiduciary responsibility is not to solicit business. That's not part of their fiduciary responsibility. All right, how does the end of the contestability period affect coverage for death arising from an excluded risk? Testable period affect coverage for death arising from a risk. The premium will increase to cover the risk. The insurer can no longer exclude the risk. It will not affect the coverage, and the policy will cover the death. I'm guessing it will cover the death. And it's not being specific on what kind of life insurance policy here. All right, to be eligible for payments under a life insurance policy long-term care rider, the insured must be certified as unable to perform which of the following? I don't remember those. It's saying at least 5 activities of daily living for 90 days, at least 2 activities for 90 days, at least 2 activities for 30 days, or at least 5 activities living for at least 30 days. So it's kind of all over the place. I'm going to say the last one, at least 5 activities of daily living for 30 days. When used in group insurance, the probationary period is the time during when the employee must be employed before becoming eligible for group insurance benefits. That's my guess. Let's look at the other ones. The employee must be employed before filing a claim. The employer has to investigate the employee to determine eligibility. They'll do that before they even give you a sign up. All right. Frank's first income payment under a variable annuity is $19.50. The value of each accumulation under the sub-accounts in Frank's contract is $10 at the time of annuitization. How many annuity units does Frank have? All right, so I would take the $19.50 divided by 10. And we'll get $195. That's what I'm going to put. 195 units at $10. I have no clue if that's right or wrong. It just makes sense. All right, for what length of time after its issue does the group life insurance policy become incontestable? Yeah, 1 year, 2 years, 3 years, or 5 years. I'm going to say 3. I'm just guessing. All right, let's go to the next set of questions. Which of the following explains why the human life value approach to determining insurance rarely is used today? Consumers generally find the human life value process too difficult to understand. It doesn't factor in all it takes to secure a family's financial future. It uses a complicated formula most producers don't like using. It produces an unreasonably large life insurance recommendation. I want to say the top one, consumers generally find the human life value process too difficult to understand. Or it could also be this one, but I don't know. Hopefully it'll tell us what we got right and wrong. All right, 22. Jim applies for a health insurance policy. Although the insurer issues the policy, it excludes coverage for losses associated with cardiac illness. The insurer classified Jim's risk as substandard. Maybe. All right, 23. Let me give you the choices. Standard, substandard, decline, and preferred. I picked substandard. Okay, question 23. Under which of the following settlement options does the insurer distribute all the proceeds upon the death of the insured or surrender of the policy, with none held by the insurer? The choices are fixed amount, lump sum, cash payment, interest only, and fixed period. Under which of the following settlement options does the insured distribute all of the proceeds upon the death of the insured, or surrender the policy, with none held by the insurer? I want to say lump sum cash payment. All right, question 24. Which of the following allows insureds to increase a policy's level of benefits or scope of coverage in the future without having to prove insurability? The choices are multiple indemnity rider, guaranteed insurability rider, impairment rider, or non-renewable, cancelable, or term policy. Which of the following allows an insured person to increase a policy's level of benefits without having to prove that they are insurable? I think that we saw this question before. I'm going to say it's an impairment rider or a guaranteed insurability rider. Guaranteed insurability rider. All right, we'll find out. A term life insurance policy in which the protection and premium amounts stay the same during the term period is known as a decreasing term policy, a level term policy, an increasing term policy, or a renewable decreasing term policy. All right, this is when the protection and the premium amount stay the same during the term period. So I want to say it is a level term because it's not increasing or decreasing. All right, question 26. For any given amount of coverage, how does the cost of group life insurance generally compare to the cost of individual life insurance? Is it more expensive, less expensive, about the same, or more expensive for smaller companies only? I want to say it is about the same. Maybe even cheaper, right? I would say maybe. Let's go with less expensive. All right, which level of long-term care is usually delivered 24 hours a day in a nursing home under a doctor's direct supervision? I would say a skilled nursing care, or it could be immediate care. I get these two mixed up. I'm going to put immediate care on this one. All right, so 28, an individual long-term care insurance credit is equal to what amount of LTC premiums paid by the individual? The choices are up to $1,000 for each insured, $250 for each insured, up to $750 for each insured, or up to $500 for each insured. So what do you think the correct answer is on that? Long-term care is LTC. I want to say $250. All right. So, question 29. Ellen participates in a group health insurance plan. Why does her premium differ from the premium she would pay for comparable coverage under an individual plan? The choices are underwriting group health insurance costs more than that of underwriting individual health insurance. The risk for a group is spread over many people. Group coverage costs more than individual coverage. Group plans have more administrative costs. All right, well, apparently they're more. So let's go back to this one. Group life is more expensive. It tells you right here it's more expensive. Why would she pay more? Underwriting group health insurance costs more. The risk for a group is spread over many people. Group coverage costs more than individual coverage. Maybe the risk, I don't know, but they're saying that it costs more, so we'll go with that. All right, which disability would most likely qualify for a full benefit under the presumption of disability provision? Is it a back surgery, heart surgery, brain concussion, or loss of eyesight? I'm going to guess the loss of your eyesight. Some of these you can recover from, believe it or not. Most of these you can, except your eyesight. If you lose your eyesight, I don't know that you can recover from that. That's why I picked that one. I'm not guaranteeing it's right. We're going to find out hopefully at the end of this. This is 130 questions, so we got a while to go. All right, I'm going to end this video and we'll continue on that next videos.